China, a sliding domestic economy, seesawing stock markets and recovery results described as no more than lackluster. Joining me to give his insight is Rahul Bajoria from Barclays Capital. So Rahul, America and 11 other nations have just agreed the Trans-Pacific Partnership, a trade agreement that excludes China. With China's trade balance widening, can China afford to be excluded from this partnership?
Well, at this particular juncture, it's a bit too early to see the impact of the TPP coming through on trade activity between these countries. While most of these countries have agreed upon the program, we still have to see each individual country passing it in their own parliaments, and then maybe after 2 to 3 years we can have some impact coming through. So in the meantime, China will continue to enjoy the bilateral trade relations they have with many of these economies. So we don't think there's going to be a near-term adverse effect on China or any of the regional economies for now.
Xi Jinping became the first president of China to shake hands with the president of Taiwan. The meeting was both historic and symbolic. This seems a move forward for China. However, China's inflation today has eased further. What direction would you say China is heading?
Well, at this particular juncture, the trade relations between the two countries have been strengthening for quite some time. We certainly see this meeting as largely symbolic, but good for stability going forward. We also think that there's a lot of interest from the Chinese leadership side to try and get access to the DPP leadership, which looks set to win the next election. So from that perspective, we think that this is a signal that they want to continue to talk even if there's a change in leadership come 2016.
6 interest rate cuts and multiple releases of bank reserves have all been aimed at recharging growth. The results so far have been described as lackluster. What can we expect from the People's Bank of China in 2016?
Well, going forward, we still think that the central bank is going to keep monetary policy fairly accommodative. We think a lot of the reserve ratio cuts have been largely aimed at sort of fulfilling the liquidity gap, which was being created after seeing capital outflows. On the interest rate side, we think the central bank basically wants to see stability, and they are likely to try and do a few more rate cuts in order to stabilize growth going forward. So we do expect another couple of rate cuts coming through in 2016 from the PBOC.
Last week we saw China rally in financial stocks, bringing back the bull market. But is the bull market back for the long term?
Well, our sense is that there's still a lot of uncertainty around the outlook for growth. Going forward, our sense is that Q4 is going to be a little bit more stable. We don't think that there's a lot of downside risk at this particular juncture. But going forward, growth could slow down a little bit further. So from that perspective, we have to see what is the impact on the markets, and we are not extremely constructive right now.
Well, Rahul, thank you for your insights, and thank you for watching. We are only 2 days into this trading week, so be sure to keep clicking back for all the latest updates. Goodbye for now.